I've got proof, I tell you, of how I am not perfect. Far from it, actually. Okay, so in this video, I'm gonna embarrassingly share with you my worst stock market trade ever, what we can learn from it, the one thing I think I might have done right on this trade, and how I might be able to go about salvaging my losses. My hope for you is that you watch this video and that you learn from my mistakes so that you don't make them as well. It's actually one of the main reasons why I'm even sharing this video with you. And then if you watch until the end, I'll share the name of the company and their ticker symbol too. The other reason why I'm sharing this embarrassing trade with you is because I actually recently had a pretty good trade and I tweeted about it, and I took a screenshot of that tweet and sent it to my younger brother, who happens to be a financial advisor, and his response was pretty good. He said, if you're going to post stuff like that, you better post both sides, ... losses too. So here you go, a tweet about a really good swing trade and an entire video about a terrible trade that I'm embarrassed to even admit that I did. So hopefully stay tuned to the channel, because I'm gonna have some more investment related videos as well coming out over the next few months that will maybe balance this out a little bit, and instead of it being a video about a terrible trade, maybe I'll make a video about something that I did really well so you could learn from that too. So stay tuned to the channel. I have lost so much money on this trade. It's actually gotten to the point where it's just laughable. I mean, it's so embarrassing. It's so bad. I just have to laugh at it. So look at this. I'll throw a little screenshot on the screen so you can see it. I am down 89.28%. And actually on the day I'm filming this, right now that I'm filming, I am down well over 90%. How can you do nothing but just laugh at that? So we've got to talk about this. What did I do wrong? A lot. Well, there were several things, but first, what I think will be helpful for you, the viewer watching this video, is to take this trade and put it into some sort of context, right? So you've got a trade within an account, within an entire financial plan. So if you are at all curious of where this particular account falls within our financial plan, or really just how my wife and I are investing right now, then check out this video right here. I'll link it up top right now, and I'll also put it at the end of the video. If you watch that video after watching this one, I think your thought process will probably be like, okay, yep, I get it. So how was this my worst stock market trade ever? Well, first off, I did no due diligence. I didn't look up who was running the company. I didn't look up what their track record was for running companies, why they were working at this particular company instead of some other ones, and really what their intentions were to add value to shareholders. I didn't do any of that. I didn't research the industry, right? The industry that they're in. Did not research that, or really whether or not this particular product that they're rolling out, whether or not it would be a huge, massive success, or if it wouldn't get adopted by the masses. Didn't do any of that research. I barely did any technical trading analysis, to be honest with you. I didn't do any of that. I didn't read any of the company's SEC filings. I haven't ever listened to any of their quarterly conference calls for their earnings reports when they came out. I didn't do any of that stuff. Truth be told, all I really did was I just looked at their chart back in February of 2021 when I bought it, looked at their chart, looked at the last 1 month, looked at the last 3, 6 months, the last year, and just noticed, thank you very much, noticed that they were down from their peak. So I at the time, it did not feel like I was buying at the top, but in hindsight and in reality, I did. I bought in at the top, unfortunately. Also, the first thing that should have triggered into your head, the very first thing that you should have thought about when I put that screenshot on the screen a moment ago about how I'm down 89%, the first thing that should have popped in your head is, yeah, but K. Scholl, wouldn't your stop loss have protected you so that you wouldn't have lost 90% of this trade of your basis? Yeah, bingo. Had I had used and implemented a stop loss, I could have absolutely saved some money and not lost quite as much as I have doing. So had I done that, that would have been smart. That would have been great. and it would have been down 90%. So what can we learn? What can we learn from my mistakes, right? Because I want you to learn from the mistakes I'm making, and that's part of why I'm sharing this video with you. So you should do your own due diligence before placing a trade. You should have an exit strategy outlined as well. What's your entry price? And if the stock is currently trading higher than what you think your entry points should be, maybe you should be patient until the stock price comes down a little bit to where your entry price is at. And if you're wrong about the stock going up, well, maybe you should put in a stop loss order, which clearly is what I did not do with this particular trade. But had you done that, most folks use about a 10% stop loss. So if you buy something at $100 a share and it drops down to $90 a share, boom, it automatically triggers a stop loss order. So that way your account is stopped from losing more money. Clearly, I should have done that with this trade. You also should research the industry of the company that you're investing in. Is the industry going through some changes perhaps? Are there new technological advances being made to enhance a product or a user experience? How will the company that you're investing in help solve a problem that needs to be solved? And then, to be honest, there are some other things that you should be looking at as well, a little bit more from maybe like a technical trading analysis perspective, but it feels a little bit outside the scope of this video. But just to kind of name a few, you should look at their chart of where they're trading at, historically speaking. You need to look at the RSI, the relative strength index, the MACD, the moving averages, the volume. These are all technical analysis trading pieces of information that you should be thinking about as part of your decision-making process before you enter into a trade. Okay, changing gears here, what did I do correctly? Well, I gotta tell you, as I just mentioned, there's a lot that I embarrassingly did not do well. But if there's one thing, in my opinion, I think I did well, it's that I didn't bet the whole farm on this one trade, right? I only was speculating and investing with about $1,000 when I placed this trade back in February of 2021. And actually, if you scroll over to my community tab and you scroll all the way down to the very bottom, my very first community tab post was kind of about this video that I'm making now. I got a $20,000 rollover from my previous employer, and I was gonna split that. I was gonna put $10,000 into dividend paying individual stocks, and I was going to put $10,000 into more growth oriented stocks, and I was going to actively trade them. So that's a little bit about what I've been doing and kind of the genesis of this particular video that you're seeing now. So I'm going to be filming more investment videos down the road about how I'm doing compared to the S&P 500, for example. That's kind of the benchmark that I'm using to compare myself against. And here's my thoughts on this particular trade of what I think I want to do in order to get back my $900, right? So I've been watching this stock for over a year because I've been invested in it since February of 2021 inside of this rollover IRA that I'm referring to. And I've noticed that there's some really good support right around that low to mid 80-cent per share price. It started well north of $15, $17 per share, and it's been dropping since then. And I've noticed it's got really good support right around 80, 85 cents per share. So if I were to patiently wait for the stock to drop all the way back down to 80 cents, hypothetically speaking, and then I put in a much larger investment, like $10,000, and average down, and then hopefully if there is a 10% bump up, like I kind of have seen a little bit of a habit of this stock reaching that support level, and then within a matter of either hours or days jumping back up 10%. So that's what I'm going to do. I'm going to swing trade this one more time, and I'm going to speculate with a much larger investment in hopes that I catch that resistance and then ride that wave up 10% for me to get that $900, that $1,000 back. So hopefully I don't lose too much, right? However, I will say when you do that, or when I'm going to do that, that's a pretty risky decision, because just as easily as it could bounce back up 10%, it could also keep going down 10%, down to 72 cents a share, and I could lose another $1,000. So when you are investing and you are taking a much more active approach with your investments, I would strongly recommend you start out with much smaller bite-sized trades, because if you make a mistake and if you do something wrong, as I have clearly shown you in this video of what I did wrong, you're not going to lose your entire net worth. You're not going to lose your entire account. You're not going to blow your account up in a bad way and lose all of that hard-earned money that you've put into your account. So be careful out there. If you're going to start to actively trade and speculate, do your due diligence, do your research, understand technical analysis, understand qualitative, quantitative analysis, understand as much as you can so that you are aware of what you're doing. And like I said earlier in the video, have a target price that you are identifying, have an exit price for you to exit your trade, and try to map it out a little bit while you are doing your due diligence. So that's a little bit about how I think I'm going to try to correct this trade with this particular stock. But listen, if it doesn't happen, woo, it could get ugly. So stay tuned for those videos, because it could, instead of being a good video, that could be a really bad video. So stay tuned for that. All right, thank you for watching this long into the video. I know I teased this earlier and you're still hanging out, so thank you for that. The name of the company of this trade that I've been referring to this whole time is Metromile. Ticker symbol is MILE, M-I-L-E. And here's just a little clip from their website. I'll throw something on the screen here in a minute. With Metromile, your rate is based on your actual driving habits. Our customers save 47% on average compared to what they were paying their previous auto insurer. So the idea and the concept behind this company is, what did we learn from the pandemic? Well, we learned that people don't have to go into the office for work. You could work from home, which means you're going to be driving less. And if you're driving less, but you're paying the same auto insurance premium, well, maybe you should shop your auto insurance coverage. I'm not endorsing Metromile. I am not a customer of Metromile. I drive a lot. So this would not be a good service for me, because I'm in my truck and I use my truck for work, and I drive all around town and in many cases outside of the state to go visit with clients and whatnot. So I use this vehicle a lot for work and business related driving activities. And you know, I wouldn't be a good customer for Metromile. But if you're one of those people who's driving less and working from home, maybe you should look into it. I don't know. But that's kind of the gist of it, is, you know, people driving less and spending too much money on auto insurance. So why not consider Metromile and pay for your auto insurance based on your driving habits and as little as you drive, and maybe even as safe as you drive, possibly even. So I don't know. Hey, let me know what your thoughts are. Let me know in the comments down below. What's been your best trade? What's been your worst trade? What do you think about this situation that I explained in this video? Let me know in the comments below, and I appreciate your time. See you in the next one. Yeah, this entire video, it's gonna be pretty embarrassing. I did no due diligence, and again, this is gonna be embarrassing. Yeah, this is gonna be embarrassing.